Yeah, $100, I don't think it's out of the question. Basically, physical demand for silver is overwhelming the paper market.
You're watching Silver News Daily. Subscribe for more.
It wasn't just a glitch. The CME's multi-hour trading halt on November 28th sent shockwaves through the silver world. And the deeper you look, the more it starts to look like a deliberate mask over a financial system cracking at the seams. For 11 hours, silver trading was frozen. No bids, no asks, just silence. While behind the scenes, physical silver vanished, premiums exploded, and the spot price ripped to nearly $56 in the thinnest liquidity we've seen in years. And then, nothing but a canned excuse about cooling failures. But insiders aren't buying it. Because when silver moves like that, up $5 in a single day, it's not just market noise, it's a rupture. And that rupture might be the first crack in a paper silver market that's been stretched to the edge for decades. What if I told you that the entire paper silver system, built on promises of metal that doesn't exist, is finally collapsing? That central banks from Russia to Dubai are hoarding silver in record volumes while the West sleeps? That the COMEX itself is showing signs of stress, with registered inventories plummeting and lease rates hitting historic highs? And what if this is only the beginning? Because once the physical price breaks free, the paper charade ends, and the real price of silver. It's not $50, it's not $60. Some are saying $100 is now a floor, not a ceiling. So what really happened that night the CME went dark? And what comes next, now that the mask is slipping? If you're watching this, you're already ahead of the curve. But stay with me, because once you see the full picture, you won't just understand why silver's breakout is inevitable. You'll wonder why it didn't happen sooner.
Important aspect is that actually central banks like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos, so almost two tons. And yeah, they're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So yeah, up until 6 months ago, the reason people gave for silver underperforming gold was that, well, central banks only buy gold, they never buy silver, but that's completely changing, and I think that's huge. And I think the silver price, right now we are like in what one would call terra incognita, like we're in territory we don't know. It's never been there before. But yeah, I think there's such huge potential for silver now that central banks are getting involved. And unfortunately in the West, very few people are aware of this stuff. I mean, you and I are aware because we listen to you listen to me, I listen to other people in the gold and silver space, but the mainstream is like completely like not really aware of it yet. Maybe the fact that like Tucker Carlson has started his own precious metals dealer might help wake people up a little bit. He's got a big following. So yeah, that's the major thing. These countries outside the West, yeah, they're going back to silver. Even Korea, South Korea, the central bank there has started buying gold again, but also silver. So, and we also seen, Elijah, that the United States and China, they've put silver on their critical minerals list. So everyone wants to get silver before those two giants get a lot more.
The CME outage wasn't just an inconvenience, it was a revelation. For 11 straight hours on November 28th, silver trading froze, and in that silence, something snapped. In those moments of thin liquidity, spot silver surged to $55.66, and the usual rhythm of the market collapsed. Traders, institutions, and insiders were left staring at blank screens, while behind the scenes, panic spread like wildfire. A so-called data center cooling issue was the official story, but the timing couldn't have been more suspicious. This wasn't just any trading day. It was the day the system started slipping, and the paper market couldn't hide it anymore. See, this halt didn't just create volatility. It exposed how fragile the entire structure really is. Without constant algorithmic liquidity and high-frequency market makers, there was no buffer, just price discovery in its rawest form. And the result? A vertical spike in silver's spot price that almost no one was prepared for. Even more telling? Backwardation emerged again, where spot prices outpaced futures. A glaring signal that physical demand is outweighing paper supply. That's not normal. That's not healthy. That's a market in distress. And the fallout didn't stop when the CME came back online. Confidence took a hit, volatility stayed elevated, and most importantly, it showed the world that in a moment of crisis, the paper-silver market can't deliver. It can't keep up. And it might not be able to survive the next shock. Because while this outage was blamed on technology, what it really revealed was fear. Fear of what happens when the physical price breaks loose from its paper chains. Fear of what happens when demand outpaces fiction. And that fear is growing louder by the day.
Back in from '05 to '08, even though I was a futures and options broker for government bonds, we had a client that traded a lot of silver. And so I was involved in that. And I could remember $5 days when silver was between $15 and $20. So I don't see why we shouldn't see $5 days again, especially now that we are above 50. And I mean, as we speak here, we're just trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60, which is half of, I guess, five. But yeah, $100, I don't think it's out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double, and if we double, we're at 100. That's why I said that in my video from yesterday. I mean, since 1980, the top of the teacup is around 51, 51.50. So not only we're getting like record monthly closes, we're getting a technical close above that lid, which is huge. And the thing is, back in October, we went above that level. That lid, we went to 54.50 or 60 or thereabouts, and then we corrected back down to below 46 very quickly. And technically, that's very bullish. You retest the breakout by going back below the breakout, and now we've gone back above. So I'm not saying silver. I don't like to say, oh, silver will never go below 50 again, because I think it still could. You never know in the precious metals market, but the likelihood is a lot smaller today.
Something extraordinary is happening behind the scenes, and it's all pointing to one brutal truth. Physical silver is disappearing. Fast. For years, the paper silver market has operated under the illusion of endless supply. But now, that illusion is crumbling. Registered COMEX inventories, what's actually deliverable, have dropped 15% year to date, even as eligible stocks hover above 500 million ounces. And yet, that's the catch. Eligible means it's there but not available. Deliverable supply is what matters, and it's vanishing. Now pair that with lease rates surging to a staggering 39%, an unheard of level in the silver space. That's the cost to borrow silver, and when it spikes like this, it means physical metal is getting harder and harder to find. At the same time, premiums on coins and bars are exploding. American silver eagles are commanding $6 to $10 over spot, sometimes even more. These aren't signs of a stable market. They're signs of panic, of a scramble for metal in a system built on paper promises. And it doesn't stop at COMEX. Look at London. A severe shortage in the LBMA has forced record silver exports out of China, 660 tons in October alone, an all-time high. Indian demand during Diwali overwhelmed the supply chain so aggressively that premiums there spiked to $5 over spot. This isn't retail speculation. This is sovereign-grade demand crushing an already fragile supply chain. We're now in the 5th straight year of silver deficits. Over 1.24 billion ounces of demand in 2024, and 2025 is already projected to be short by up to 149 million ounces. Even recycling can't fill the gap. The system is stretched thin, and the physical market is screaming the truth that the paper market is still trying to ignore. And if this keeps up, and all signs say it will, the paper shorts that have suppressed silver for decades could soon face the mother of all margin calls. Because when you sell what you don't own, there comes a day when someone finally asks for delivery. And that day is getting closer.
Oh, for the average investor, especially if they don't have experience in markets, professional experience like I have and other people, futures trading is just for professionals, I think, and speculators. And they shut the market down. Some people are saying, "Oh, they shut everything down. It wasn't just silver," but I don't know. It smells. It's a little bit suspicious. It's almost like they shut it down for hours. A CME exchange is probably the biggest exchange in the world, derivatives exchange. For them not to have backups and continue trading is kind of far-fetched, especially during this Thanksgiving weekend where the markets are a lot quieter. There isn't that much activity. We've seen a lot busier days where everything runs smoothly, especially back in October when silver was down massively. They didn't close anything down. Yeah, they're going to say, oh, it was a technical glitch. But yeah, physical, I always say you start with physical. That's how I started back in '03, buying physical silver. I had started buying gold a year earlier. Avoid futures, avoid ETFs. The reason I say that is because ETFs are just a promise. They say they've got silver backing it, but I don't trust the banks. You've seen what happened today on the CME/COMEX. They just closed it. They could do the same thing with the ETFs. They could decide not to deliver to you, or even big institutions. And then there's the mining stocks. If you want to get involved and get more leverage to the silver price, I don't see why not. It just depends on the individual. And because sometimes I guess if you don't have enough room, it's quite bulky to get physical silver. So it could be easier to own some silver producers. That's the other alternative, I would say. And again, not financial advice, like you said, just our.
While the West debates inflation numbers and interest rates, the East is quietly rewriting the rules of the silver game. Central banks and sovereign funds, especially those in Russia, China, Turkey, India, and the Gulf states, are no longer just stacking gold. They're loading up on silver, and they're doing it without fanfare because they know exactly what's coming. In 2025, Russia became the first nation to publicly allocate funds, $535 million, for silver and PGMS over a 3-year period. That's not investment, that's monetary preparation. India, meanwhile, just flipped the script entirely. Beginning April 2026, the Reserve Bank of India will allow citizens to use silver, yes, physical silver, as collateral for loans. Up to 10 kilograms of silver ornaments per person could now unlock up to $50 billion in previously illiquid household wealth. That's a financial shift with massive implications. It legitimizes silver as a monetary asset, not just an industrial one, and it opens the floodgates for physical silver to vanish from the market even faster. But the biggest psychological shift came from the Middle East. Dubai unveiled a 1,971 kilogram silver bar, not for show, but for tokenization. A Guinness record-setting silver bar designed to back digital silver assets on a blockchain. Think about that. Sovereign-grade silver, tokenized and vaulted, never to return to the open market. It's being taken off the table, permanently. And let's not ignore the trend. South Korea resumed silver purchases alongside gold, and both the US and China have now officially added silver to their critical mineral lists. That means tariffs. That means export controls. That means premiums. And that means less physical silver making it to market. Western investors are still sleeping, still arguing about whether silver is an inflation hedge or a commodity. Meanwhile, the rest of the world is treating it like money, real money. And once enough of it is locked away, when the music stops and there aren't enough chairs, it won't be the central banks left without silver. It'll be everyone else.
Remain calm. I try to stay even keel. Even on the way up back in beginning of October, the market went crazy on the way up, especially gold. I try to stay calm and not too excited. And the same thing when it corrected. Same thing now. But for people who want to get involved in silver, I would say don't go in all at once. I don't, if you have a certain amount of dollars, don't go and buy all of it in silver. Maybe dollar cost average, and don't worry about the price, because if you do it regularly, you're going to get a period when the price is corrected down. So yeah, I think that's the best thing to do. But it's getting, I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, because the dealers, when it's very volatile, they need to have a wider bid and offer spread to protect their profitability. So that's the only thing I would say right now.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
I mean, yeah, I heard that from Andy Scheckman last week. I interviewed him. He said the constitutional or junk silver is, yeah, it's almost trading at spot, which is unusual. I'm not really picky. I just try to get the best deal in silver. And I think as long as you have silver, that's fine. Yeah, I think everything will do well. Here in the UK, I like buying the coins of the realm, like the 1 ounce silver Britannias, and I have some like pre-1920 sterling silver coins as well. Those are they're like the junk silver for the UK. Yeah, and in the US, I would stick to silver eagles and pre-65 coinage. And I guess that if you have millions, of course, you might want to think about bars, silver bars, like 5,000 ounce bars and stuff like that. But for the small investors, yeah, stick to the coins and maybe some 100-gram bars and stuff like that.
The price action is already telling the story, if you know how to read the signs. Silver isn't grinding higher, it's bursting through resistance. After consolidating under $50 for years, we've finally seen a confirmed breakout above the psychological and technical ceiling that held this market hostage for over a decade. And this isn't just any breakout. It's a textbook cup and handle formation, and the handle just snapped. Now let's talk numbers. Silver hit a nominal all-time high of $58.98 on December 3rd, and even with minor pullbacks, it's holding firm above $57 as of early December. More importantly, this isn't a speculative pump. The RSI is sitting at a healthy 65, MACD just flashed a bullish crossover, and the 50-day moving average is now acting as firm support around $52.40. In technical terms, this is momentum with muscle. This is structure backing a surge. But what really matters is the way silver is moving. These aren't your standard 30-cent days. We're now seeing $1 to $2 daily swings as a baseline, and $5 moves are on the table. In fact, during the CME outage alone, silver surged nearly $6 intraday. That level of volatility doesn't just happen. It signals stress, urgency, and institutional recalibration. The market is repricing risk, and it's doing it fast. Even more striking? We've just closed a month above $50 for the first time in history. Not a spike, not a wick. A monthly close. That locks in a new trading range and opens the door to the next leg higher. Technical projections based on the cup and handle formation are now pointing to targets between $87 and $96, and that's just the measured move. Layer on the physical shortage, sovereign demand, and institutional FOMO, and suddenly $100 isn't a moonshot. It's the next milestone. This is what a breakout looks like when it's real. When it's not driven by hype, but by scarcity, structural failure, and monetary revaluation. And for those watching the charts, the message couldn't be clearer. The price of silver isn't rising, it's being redefined.
Yeah, I mean, it's very surprising for me, and but I think maybe these central banks are waking up to the fact that yes, it's good to have gold as more of a reserve asset, but silver will provide more liquidity as well in terms of a day-to-day asset or money or currency to use for the general public. And I see that. I think it's Ronan Manley and Bullion Star. I'm not sure if it's together with Bullion Star. They're helping develop this token in Dubai, silver-backed token. So I'm not sure exactly yet what that's going to be like. But yeah, you could go to Dubai and use silver as currency. So I think, yeah, and that helps liquidity because you're not just focused on gold. You have like a bimetallic standard. That's how it used to be in the US prior to 1873. So I think this is truly historic. And it's going to catch a lot of people by surprise because we've been told that silver will never be money again or be used again, that you need to be into Bitcoin and cryptos. But maybe going back is what it's all about, going back to real money. I mean, Elijah, the name dollar comes from a silver coin called the Spanish dollar, and that comes from the Joachim's Thaler coin. In Spanish, plata, which is silver, also means money. In French, argent means silver, means money. So, and we've only been, let's say, separated from silver as money for about 50, 60 years. I mean, in the 60s, a lot of countries still use silver as money. And
what we're witnessing now isn't just a breakout. It's a breakdown of the paper-silver system itself. The ETFs, which were once touted as a reliable vehicle for silver exposure, are bleeding metal. Physical redemptions are accelerating. SLV and other major funds are being drained as institutions quietly convert paper claims into actual metal and pull it out of the system. The reason? Trust is evaporating. The game of musical chairs is nearing its end, and the smart money knows that holding a promise to silver is no substitute for the real thing. At the same time, COMEX is flashing red. Outflows from registered inventories have picked up pace again despite a brief reprieve in October. The inflows we saw back then, about 75 million ounces, were nothing more than a stopgap. They've already been met with accelerating outflows, especially as more contract holders demand physical delivery. This isn't some internet-driven hype cycle like in 2021. This time, it's institutional-grade pressure. Sovereigns, funds, and high-net-worth individuals are asking for bars, and they're not reselling them. They're disappearing them. Premiums are soaring across the board, not just on coins, but on kilobars and 1,000-ounce bars, the kind institutional players use. In London, the arbitrage gap between the LBMA and COMEX has widened to as much as $1.55 per ounce, a clear sign that silver is being sucked out of one hub and rushed to another. Lease rates, spiking, backwardation, persistent. The mechanisms that used to suppress silver are starting to reverse, and they're doing it violently. And here's the most important part. This pressure is no longer theoretical. It's mathematical. With a projected deficit of up to 149 million ounces in 2025 and no relief in sight from mine supply, the market is cornered. Short sellers are trapped, and the fuse has been lit. If just a fraction of paper holders demand delivery, the whole system will fracture. This isn't about Reddit. This isn't a meme. This is a fundamental collapse in confidence, the kind that turns a short squeeze into a full-blown financial reset.
Yeah, and I think also the countries like China and others, they've seen how having a reserve currency that's controlled by one country is not a good thing, like what the U.S. did. You get like Triffin's dilemma. So it's ironic that supposedly authoritarian and undemocratic countries like China, Russia, and the Middle East, they're the ones going back to sound money first. But even if they weren't going to go back to using it again as money and currency, I still think it's a good place to be, just as a wealth preservation. And
Everything is in motion now. The CME outage was the spark, but it was only the beginning. What it revealed is that the paper market is too fragile, too leveraged, and too disconnected from physical reality to withstand what's coming next. Physical demand is off the charts. Supply is shrinking. Central banks are reclassifying silver as a monetary reserve. Tokenization is pulling bars permanently off the market. And the price? It's already running ahead of the news. We're not waiting for $100 silver anymore. We're counting down to it. Technical patterns are pointing to $87, $96, even $105 in the next major move. But more importantly, the system that kept silver suppressed for decades is breaking. Premiums are widening. Backwardation is persistent. Paper shorts are being drained by physical deliveries they can no longer meet. The game is up, and the exit doors are narrowing fast. For years, silver was the overlooked metal, industrial, forgotten, manipulated. But now, it's the most strategic asset on the board. It's no longer about if silver will hit $100. It's about who will be able to get it when it does. And the answer? Not many. If you see what's happening, you know what comes next. Subscribe for real-time updates as this market unfolds, and make sure you're not the last one holding paper when the music stops. This is not financial advice. Speak to a licensed professional before making any investment decisions.